we have learned what it takes to keep track of the books for a service business organized as a sole proprietorship. So everything we've learned so far, if you were to go out and start a lawn care business, pretty much you could keep track of the books now. Okay? But what we have yet to learn, and what our learning objective is going to be for our next unit that we're going to be learning about, is going to be, how do we know if we've been successful in our business? How do we define success in a business? If we make money, right? Now, do we have any idea so far if any of our businesses have been profitable? Nothing. We have a balance of cash. Most people say, hey, if I have cash, I must be doing well. But is that necessarily true? Not necessarily. So what we have to look at next, and what our learning target is going to be going through and taking a look at what we have learned, how we've journalized things to keep track of what's been done in our business, and for us to determine whether or not our business has been profitable. So there are a couple of different financial statements that we're going to be learning about within a couple different chapters. Okay, so we're taking a look at Chapter 6, and this is going to be going through Chapter 6, 7, and 8. We are going to be doing what is called our end of our fiscal year work. Or not year, I should say end of fiscal period. Because a fiscal period can be however long you want it to be. Now, if I'm going to start this really cool business where I start giving golf lessons, I shouldn't wait till the end of 12 months to figure it out if I've made money. Because if I'm not making money right away, what should I do? Something different, change. Maybe it's offer a discount, make rates. Do something different. Don't wait till a whole year passes to determine whether or not we're profitable. Would you agree? So a fiscal period is going to be any length of time a business is going to operate, and then it's going to determine to see if they are making money or losing money. So when a business first starts, it really does make sense for them to find out at the end of a month whether or not they're profitable or not. Now, do you think Best Buy needs to do it every month? They've been in operation a long time. They have some means and measures for them to see whether or not they're making money or losing money. But a small business just starting up, you're going to have to go through frequently and check to see how we're doing. Okay? Now, would it make sense for us to go through and determine daily if we're making money? I think that would be hard. So think about it. We are going to make money in a business if our revenue is greater than our expenses. Would you agree? Okay, so today is December 1st, correct? My rent is due. My rent is $500. If I'm determining if I'm profitable or not today, what does that mean my revenue needs to be? Greater than 500. What are the odds of my revenue being greater than 500 in one day? Not good if I'm giving golf lessons and it's December 1st. Would you agree? So when you take a look at a day may not be the wisest choice to go through because you may have an expense that's going to be paid on one specific day because the nature of the expense. Just like your telephone bill. Okay, you pay it on one day, but even though it's going to cover most typically a whole entire month. So for a fiscal period, which is going to be determined by the owner, right now when we first start, we're going to be doing months, and then we'll take a look at doing it quarterly, and Best Buy will take a look at its finances quarterly to see where it's at. And then after that, you're going to have a year. Every year, every 12 months, a business is going to need to go through and determine whether or not they made money or lost money. Now, does 12 months need to go January, December? Do you think it takes them a lot of work to go through and prepare their books at the end of the fiscal period to see whether or not they're profitable? Now, when you take a look at bigger businesses, they have to do things called inventory, go through and count physically what they have. Even if their computer system tracks it, think about it from this perspective. I go to Don's tonight. My son loves pickles. You get to the pickle section, he picks up a jar of pickles and goes, "Mom!" And what does he do? Drops it. Now, is Don's going to make me buy it? No, they're really nice. They don't make you buy it if they drop pickles. I haven't done it yet, but this is my best example. Now, so they can't bring up that jar of pickles as a sale, so that's going to be a loss for Don's, right? So they have to go through and count inventory periodically to see what they have on their shelves if it matches what they have in their books. Every business has to do that. The Thunder Zone has to do that as well. So we have to account for some inventory controls. That takes a lot of time, depending on the nature of the business, for them to physically count inventory. Have you ever walked through a store when they're actually doing inventory? And sometimes they'll say, don't inventory, or tagged furniture, already done. I've seen that in clothing stores where, like, the mannequins, they actually do say, don't do inventory. Do you know that they do inventory here at the school? They're not counting students. What do you think they have to do? Books? Okay, what do you think's worth more than books? Computers? And if you think all of your computer devices, they have an asset tag on it, somebody is going to go through sometime this year, and they'll have a little scanner, and they'll go through and they'll scan each one. And then that gets put into a system to see, do we have, what we say we have on the books is truly what we have. So inventory takes a lot of time. So when we're talking about the end of the fiscal period, a business is not going to plan its end of fiscal year work when they're the busiest. Does that make sense? So if I'm Toys R Us, when am I busy? December, right? And even if it's after Christmas, on January 1st, what is everyone doing? Returning items, would you agree? So end of December is not a good time for Toys R Us to say, hey, let's close our books and see if we're profitable. What would be a better time? Maybe middle of summer? Maybe springtime? When the season, when they're typically not as busy? Now, golf course. When should they not close their books? Summer. Right? They shouldn't close their books in July. Could a golf course here in Wisconsin close their books on December 31st? That makes sense for them. Okay, how about if I'm selling snowmobiles? If I was selling only snowmobiles, I should take a look at closing my books in the summer. What if I was selling snowmobiles and boats? Never close my books? I have to close my books at one point because I need to know how I'm doing within a year. Either spring or fall, depending on which one I sell more of. If my business, I sell more snowmobiles, then I could probably do it in the fall or the spring, or if I sell more boats, then I should probably take a look at doing it in the fall. Does that make sense? So you really need to take a look at the nature of the business and determine when is a good end of the fiscal year. Now, think about our school. Should the school close its books on December 31st? We're kind of in the middle of a school year. Does that make sense for them to close it in the middle of a school year? So a school's fiscal period goes July 1 to June 30th. Kind of makes sense, right? They end all of their book stuff in the summer when there's no students. And there's no teachers here to pay as well. So that makes a good choice. So each business has to determine when their fiscal period is going to be. Again, when we first start out, we should check monthly to see how we're doing. But otherwise, once a year, they have to go through and determine how profitable they are, because then they have to do what with their profits? To the government. Pay taxes. Okay, so that's why you have to do it at least once a year. Now, big businesses do it quarterly, and then they will go through and report whether or not how much money they've made, and maybe they would pay dividends. Have you heard of those being released before, dividends? That deals with corporations, and we're sticking nice, simple, straightforward with our sole proprietorship. So we've gone through, we learned how to journalize. Now, we are to the first step of our fiscal period to determine, hey, how are we doing? Is our business doing okay, or do we need to make some changes? So we've gone through, we've journalized, and after we've journalized, how do we know if we've journalized correctly? You just did it. Before you post, what did you do? At the very bottom of a page, totals. What happens? They have to equal, right? If your debits and credits equal, you do, yeah, kind of homework came out dance. I know you all do it. I've seen it. Okay, so if your debits and credits equal for your journal, you know because they come out at the bottom. Now, after that, we take our information from our journal and then we post it. And posting is important because at any given point, if I need to know what I have in supplies, I look in my ledger. If my business has been in operation for 17 years, I don't want to go back on each page and try to find each supply. That does not make sense. Would you agree? So we take our information from our journal and put it in my ledger because the ledger gives me a snapshot of that one account at that specific time point. It shows me what happens. But what we have not done yet, is it possible for me to make a mistake taking my information from my journal and putting it on my ledger? Oh, yes. You'd be surprised how many mistakes you can make just taking it from the journal and putting it on a ledger. Now, when you get into bigger businesses don't have somebody physically go through and post like we have done. They use automated accounting system that does it for you. So if it says debit supplies $50, it automatically puts it in the ledger as a debit of $50. You don't physically have to do it. We go through, and I teach that still in high school accounting without teaching you the automated method because I need you to understand how it all works together instead of going through and saying it just does it for you and not understand. It allows you to be able to go back and find and fix things better. But what we have to do is we have to make sure after we've posted everything to our ledger, do our debits and credits still equal? And our debits and credits need to equal because of our accounting equation of assets equals liabilities plus owner's equity. Anything that we do within our journal still always go back to that first accounting equation. That's the first thing we learn. And then from there we learn normal balances, debits, credits, increases, decreases. But as long as you make sure that your debits and credits equal, you will then know that your accounting equation is in balance. So the first thing that we have to do within Chapter 6 is we are going to be completing a document called a worksheet. The worksheet is not a permanent financial statement. What does that mean? If I go to Best Buy and I look at their annual report, I am not going to find a worksheet. It is something that accountants do to make sure that their accounts are ready for the end of the fiscal period work. Especially when we take a look at people that do manual accounting, which is basically what we're looking at doing now. We don't have a computerized system. We go through and record things individually. Again, so it helps us to learn how everything works together. When we do manual accounting, we have to go through and make sure that our accounts are ready for our end of fiscal period work. So we do something called a worksheet. And a worksheet looks like this. I know it's been open. I'm going to actually get my instructions off here for a little bit. On our worksheet, on the very top, we have 3 lines. Those 3 lines on our worksheet are always going to be the same 3 pieces of information that will appear on any financial statement. The very first line is always going to be the name of the business. The second line is always going to be the name of the document. What are you creating? This is physically called a worksheet. You're going to be learning about a balance sheet and an income statement. Whatever financial statement you are preparing is going to go on that second line. The third line on your worksheet is always going to be the date. And now this is where it gets a little bit tricky. Sometimes you prepare a financial statement for the whole fiscal period, whether or not that period is a month, a quarter, or a year. And sometimes financial statements are saying it's just today. And I'll be teaching you the difference between this. So we know on a worksheet, on the very top 3 lines, we have the name of the business, name of the document, and then the date. Then we take a look at what is on our document here. Right here is going to be our account title. The account title is truly where we are going to list every single account, even if it has a 0 balance, goes on here. So where do we get that information? Well, we just went through our reinforcement activity. Our reinforcement activity had journal pages and it had ledgers. In some ledgers, I told you when you first started that, nothing is going to affect it. So what are some accounts that were on your ledger that you did not affect? Supplies expense? I thought you used utilities. Insurance expense, and there was one more. Income summary. Those 3 you did not use. And it should have had a 0 balance. If you had something in there, we have a little problem. But we'll work on it. So what we do is we really look at our ledger for our business, and we list every account in the correct order of our account numbers. Again, assets start with the number 1, and then they're going to be listed down. Assets are listed in the order of liquidity. The easiest is turned into cash. And then we have our liabilities, which are in alphabetical order, and then you have your capital, and then you have your revenue, and then you have your expenses, and expenses are in alphabetical order. But as long as you follow the order in your ledger, you'll be good to go. Don't start filling it in yet. So here we have our account title. Now moving across, we have 4 columns for numbers. Okay? This first column here is trial balance. What you need to know when you look at a worksheet is the purpose of each one of these columns. We are going to spend one day learning about this column. We're going to spend another day learning about this one. It'll be a really short one. And then we'll spend another day learning about these. Okay, the purpose of a trial balance. Excuse me. The word balance is in there. And when you hear the word balance in accounting, what should always balance? The very first thing we learned. Accounting equation, right? And we know the accounting equation equals when our debits and credits equal. So the purpose of a trial balance is to make sure that our debits and credits equal after we've posted. We know that they were good when we journalize, because our debits and credits equal at the bottom. But we don't know after we've posted if we did all of our posting correctly. It's really easy for me to take a number from my journal and then transpose it and put it into my ledger. Or on my journal, it was a debit and I put it on my ledger as a credit. That can happen. Or I did a math mistake. Maybe I subtracted when I should have added. So we need to make sure before we do anything else that our debits and credits equal. And we do that by making sure our trial balance equals. And now let me tell you the most important rule that you are going to remember. When you are doing your worksheet, if your trial balance does not equal, stop and don't do anything else. Okay? Very, very important. You are going to have an assignment where I'm going to say, do the worksheet. If your trial balance does not come out, nothing else on the entire worksheet will come out. So stop and find and fix the mistake first. Don't say, oh, I'll just do the rest of it and then I'll fix the mistake, because that is what accounting to? Huge waste of time. Like they can tell you, really, trial balance doesn't equal, stop right there and get it fixed. You have to do that. It is so important. Because you're going to put numbers in other spots and then they're going to be wrong and then you got to delete them and then you got to re-add, and it is really more work to go back and fix it later than it is to just slow down and find and fix it first. So trial balance. Now adjustments. Okay? The purpose for adjustments is to go through and adjust for things that we have used. What are some things that we have used up in our business? Supplies, right? Have we used up supplies during the month? Okay, so the adjustment column, we really are going to account for things that we have used up. Right now, it's really simple for our adjustments, but later on, life gets more complicated. Now, income statement. Income statement really helps us to determine whether or not we've made money or lost money. We know if we've made money or lost money because revenue needs to be greater than expenses. Okay? Balance sheet. What always has to balance? Accounting equation of assets, liabilities, and owner's equity. So all of these columns here have a specific purpose. We are going to start today first with our trial balance. And the purpose of a trial balance is to make sure our debits and credits equal. So when we look at our directions for this assignment, it tells us, the worksheets given below, I'll guide you to the following example. On February 28th of the current year, Golden Tan has the following general ledger accounts and balances, and the business uses a monthly fiscal period. So on the very top, we're going to put in the name of our business, which is Golden Tan. You always fill out the top portion first. Then you're going to put in the name of the document, which is called a worksheet. And then our date, and the date is going to be 4 months ended February 28th of the current year. Now, when I say worksheet, I'm not meaning like a piece of paper that you fill out in another class. A worksheet is a financial statement that we are going through and preparing. Now the next thing I have to do is I have to enter each account from my direction, and I'm going to enter in cash. And then I have to put in its balance of $9,800 as a debit. Then I'm going to put in petty cash, $150 as a debit. Accounts receivable, Ruby Price, debit of $2,795. Supplies, $456. Prepaid. Insurance, $750. Accounts payable, Richard Navarro, $555. Gary Baldwin, capital is going to be a credit of $14,885. Gary Baldwin drawing will be a debit of $3,400. Income summary does not have a balance, but it still needs to go on there. Sales has a credit balance of $4,320. Advertising expense has a debit of $931. Insurance expense does not have a balance, but it still goes on there. Miscellaneous expense has a debit balance of $378. Supplies expense, nothing, but still goes on there. And then we have utilities expense, has a debit of $1,100. The next fun thing that you need to do is you are going to take out your calculator and you are going to add up your debits and credits. If your debits and credits do not equal, you have a mistake. For Section 6.1 is really just completing the trial balance. You do not need to do the on your own.